it's all been created on a very much a slither of data if you compare it to the data that is in scope for open finance, which means the possibilities are endless. So open finance as a term in the public consciousness really came to the fore when Mint.com started aggregating data to offer customers different product positions and products around the mid-2000s. What it essentially is, it's the right for a customer to securely share their data with third parties via other third parties, if that makes sense. And it's kind of the next wave, open finance anyway, of the Open Initiative, which started with open banking in the UK, PSD2 in Europe, and is now being sort of packaged up and delivered around the world in different jurisdictions in different guises. Why it's relevant right now is that the FCA has issued a CFI, which is a call for input. And that essentially is a framework which the FCA has suggested that open finance will entail, which covers all sorts of different types of industries. So not just banking, we're now talking about the insurance industry, the pensions industry, the mortgages industry, the investments industry. So really wide ranging, which is why the impact of this could be really, really significant if it's done well. Because what it can lead to is the total personalization of products for you and for me, and for the accessibility of financial products to be a lot wider than it is right now, because things like credit decisioning and risk management, and even the way that banks manage their treasury, will be completely turned on its head just because of the massive data that these organizations will now have to know their customers so well. For me, and in my perspective, if this is done well, you're talking about a key technology that will underpin propositions, products and distribution in the finance world, possibly for the next decade, maybe even the next 2 decades. But obviously the rollout will be significant and relatively complex. So there's probably going to be a lot of hurdles, and it is going to be quite complex in terms of the way that open finance is rolled out. One is just getting cross-industry alignment. Open banking was simpler in a way because it was really dealing with the banks, with the fintechs and with customers. But in this case, you're actually now talking about the pensions industry and the investments industry and the mortgages industry. And some of those are banks and some of those are not banks, they're just financial services companies. So aligning all of those guys around one way to standardize the way that you expose your data is going to be really difficult, because all those companies and all those different industries store different data points in different ways. And in addition to that, some of those companies have actually got still paper-based historical artifacts, which they will need to digitalize before they can then expose it via sort of an API mechanism. And that in itself is going to cost a lot of money. So one of the key, issues with open banking is that it's cost a lot of money for the CMA9, who are the banks, to put in place. And then there's questions around whether it actually makes them more competitive and whether they're seeing a return on that investment at this point. And you're going to be hearing a lot of that kind of noise coming from some of, especially the smaller tail players in these different industries, because the cost of putting this in place can be quite significant. So one of the things that's really, really important to overcome all that is to put together a working group. In the same way that open banking had the OBIE, there needs to be a similar construct put together, which brings together these industries in a forum where they can talk and they can iterate on the process and the framework as it's rolled out. There's plenty of learnings to take from the open banking implementation. One is don't over-standardize. I think we've seen, and almost the beauty of open banking was that although the frameworks were pretty set, there was some wiggle room in terms of the way that you expose your data. And over-standardizing across multiple different verticals, like we've got for open finance, will kill the initiative before we start. The second one would be don't let security kill the journey. So again, use the learnings from open banking, which is now 3 years in, 2 years really in the hands of customers. And because there's been a lot of progress made in terms of making the customer journeys less jarring than they certainly were envisaged to be at the beginning. So use those learnings and put in place, interesting things like app-to-app redirection and a more seamless way of doing two-factor authentication to make these journeys more palatable for customers to use. The third one, and I touched on it earlier, would be to put in place a construct like the OBIE. It's going to be much more difficult to do and much more complex because open finance is covering a lot more ground. But that kind of construct and industry body is really, really important for this to flourish. And then summed up, I'd probably just say, just make it very, very simple and just don't over-standardize. We should be excited about the possibility of open finance. Essentially because if you look at open banking and the impact that it's made, the propositions that it's created, the fintechs that rely on it to power their propositions, it's all been created on a very much a slither of data if you compare it to the data that is in scope for open finance, which means the possibilities are endless. The possibilities for personalization and the possibilities for people who at the moment who just don't have access to financial products to have access and to actually manage their finances better. So really, really important. It's going to take a long while to get there, but what a fantastic opportunity this is for the industry going forward over the next 10, 20 years.